Our guest does not need to see more data. He already sees some cracks in the recent numbers that we've gotten. And what B. Riley Wealth Portfolio Advisor's Chief Investment Strategist Paul Dietrich sees reminds him of a time when investors lost a lot of money. Paul, you say the data have echoes of the dot-com bubble right before it burst. What do you see?
I managed money during that whole period and also 2008, 2009. And again, I was kind of early on because I was looking at the underlying data and the leading economic indicators, and I started going defensive, and we made money.
Well, what did you see?
Basically all the cracks that when you look at a bubble, and we saw that with the dot-com bubble, it was just craziness, and we saw it even with the mortgage-backed securities bubble right before the 2008, 2009. People were just, the market was disconnected from any fundamentals of the underlying stock or the underlying economy. And we're seeing that exact thing right now with the stock market.
Well, okay, dig into the most recent jobs report. Last Friday, 272,000 jobs created. That was the headline number. Right. So what did you see when you dug deeper?
When you dig deeper, about 48%, almost half, of the jobs created were government or government-related, because of spending that's being, deficit spending that's being pumped into the state and local governments. Mm-hmm. That's all going to end on September 30th, which is the end of the government's fiscal year. It has to be spent. The big question is, and this is going to hit in the fourth quarter or the first quarter of 2025, is where's the money going to come from for all those jobs that have been funded for the last 4 years out of deficit spending? Are state and local officials going to take it out of tax revenues? I don't think so. You're going to see, I think, a real change and drop. And then the other, because most of those jobs were part-time jobs, mm-hmm. and hospitality, those are restaurants. We weren't creating very many full-time jobs.
High quality.
Yes.
Yeah, the six-figure style. You also note something, and I want our viewers to really listen to what he has to say about this, the difference between what the S&P is yielding, meaning the dividend yield for all S&P 500, versus what Treasury bills are yielding. Because if we put this up on the screen, and we show our viewers all the time, we don't just look at the 2-year and the 10-year, we are looking at T-bills, anywhere from 1 month to 12 months. Yeah. They are all yielding 5.2 plus percentage points in yield. So look at the S&P, 1.35% dividend yield.
Why would you do that?
Why would you go into the S&P versus Treasuries at the moment? It's
just completely overvalued. And I even tell investors, look at what people like Warren Buffett is doing. He's built up, he sold most of his portfolio where he doesn't have a major interest in the company, but even some of his favorite stocks like Apple, he's sold some of it because he knows they're overvalued. He's selling out at the high. Remember what your grandmother told you as a little girl? Buy low, sell high, and they're all doing that. Jeff Bezos, Bill Gates, the Walmart family, they're all selling their companies, not because they don't like them, is they're going to buy them back at a much cheaper price when we see the correction.
Paul, what's the trade? What do you tell your clients to buy then?
Well, right now, I think what Warren Buffett is doing, he's moving $187 billion into T-bills and cash equivalents, is I have my clients in gold. I have them in the short-term treasuries primarily. And
look at the 1 month, 5.36%.
Yeah, that's not bad. Remember, for people who are retirement, that's not bad.
But But gold is not well at record, but it's very close to an all-time record. So you're saying buy at the highs here?
Yeah, because if in fact you believe, as I do, that we're going into a tough economic period after all this stimulus money, is cut off, then gold will do very well. And also, the IMF last week, the International Monetary Fund, warned the United States for the first time that they have to do something about their deficit spending. And
yeah, good luck with that.
Yeah, good luck with that. That's another reason why you want to be in gold.
Paul Dietrich, wonderful to have you, I think. It's a little anxiety-inducing, but we appreciate it nonetheless.
We're at a pivot point, and it's going to hit, I think, in fourth quarter of this year.
Fourth quarter. We'll have you back.